Hey everyone, and welcome back to FX Videos, the podcast where we break down the latest in the Forex market, share actionable insights, and help you stay ahead of the curve. I'm your host, FX Videos, and today we're diving into the first trading day of 2025. That's right, January 1st, 2025, is behind us, and the markets are gearing up for what could be a wild ride on January 2nd. So, grab your coffee, settle in, and let's get into it. Alright, let's start with the big picture. January 1st is a public holiday in most major financial hubs, so the markets were closed. But don't let that quiet day fool you, there's a lot brewing under the surface. As we look ahead to January 2nd, traders are already positioning themselves for what could be a volatile start to the year. Let's break it down by currency pair and what you need to watch. First up, the US dollar. The greenback ended 2024 on a mixed note, and all eyes are now on the Federal Reserve. Rumors are swirling about a potential shift in their monetary policy stance. Some analysts are predicting a pause in rate hikes, while others think the Fed might even hint at cuts later in the year. This uncertainty is keeping the USD in a tight range. On January 2nd, we'll get the first glimpse of market sentiment for 2025. Watch for any early moves in the DXY dollar index. If it breaks above 105.50, we could see a bullish trend forming. But if it drops below 104.80, that might signal a weaker dollar ahead. Keep an eye on the euro to US dollar and pound sterling to US dollar pairs, they'll be the first to react. Next, the euro. The euro to US dollar pair closed 2024 just above 1.0900, and traders are cautiously optimistic about the Eurozone's economic recovery. The European Central Bank, ECB, has been tight-lipped about their next steps, but inflation data due later in January could be a game-changer. For January 2nd, I'm watching the 1.0950 level closely. If the euro breaks above that, we could see a run toward 1.1000. But if it struggles to hold 1.0900, we might retest the 1.0850 support. Also, don't forget about geopolitical risks, any surprises from the EU could shake things up. Now, let's talk about the British pound. The pound sterling to US dollar pair has been on a roller coaster lately, thanks to Brexit aftershocks and the Bank of England's hawkish tone. The pair ended 2024 around 1.2700, and traders are waiting to see if the bow will maintain its aggressive stance in 2025. On January 2nd, the key level to watch is 1.2750. A break above that could signal a bullish move, while a drop below 1.2650 might indicate further downside. Also, keep an eye on UK manufacturing data. It could give us some early clues about the health of the UK economy. Moving on to the Japanese yen. The US dollar to Japanese yen pair has been a standout in 2024, with the yen weakening significantly due to the Bank of Japan's, BOJ, ultra-loose monetary policy. But there's chatter that the BOJ might finally pivot in 2025, which could send the yen soaring. For January 2nd, the 145.00 level is critical. If the yen strengthens and pushes the pair below 144.50, we could see a sharp reversal. But if it holds above 145.50, the downtrend might continue. Traders should also watch for any comments from BOJ officials, they could drop hints about future policy changes. Now, let's touch on the commodity currencies, AUD, NZD, and CAD. These currencies are heavily influenced by commodity prices and global risk sentiment. Australian dollar to US dollar, the Aussie ended 2024 around 0.6800, and traders are watching China's economic recovery closely. If China's PMI data surprises to the upside, the AUD could get a boost. NZD/USD, the Kiwi is in a similar boat, with key resistance at 0.6300. A break above that could signal a bullish trend. US dollar to Canadian dollar, the loonie is holding steady around 1.3500, but oil prices will be a major driver. If crude oil rallies, the CAD could strengthen. Alright, let's talk about the calendar. January 2nd is packed with potential market movers. US ISM manufacturing PMI, this will give us a snapshot of the US economy's health. Eurozone inflation data, early estimates suggest inflation might tick higher, which could impact the euro, oil inventories. With tensions in the Middle East still high, any surprises here could shake up the commodity currencies. So, how should you approach January 2nd? Here's my take: be cautious, the first trading day of the year can be unpredictable. Don't over-leverage. Focus on key levels, use the levels we discussed as your guide. Watch for news, any unexpected headlines could trigger big moves. If you're a scalper, look for quick opportunities in the euro to US dollar and pound sterling to US dollar pairs. For swing traders, consider setting up positions in the US dollar to Japanese yen or Australian dollar to US dollar, depending on how the day unfolds. And that's a wrap for today's episode. I hope this breakdown gives you a solid game plan for January 2nd. Remember, the Forex market is all about staying informed and adapting to changes. If you found this episode helpful, don't forget to like, subscribe, and share it with your trading buddies. Until next time, this is FX Videos signing off from Forex Frontier. Stay sharp, stay profitable, and I'll catch you on the next episode. Happy trading!